Morning, everyone. After I spoke here last year, I did try to start learning Spanish. I started with the Duolingo app. I made it. I was doing it every day for about 2 months. And then, then the bear market started. And I remember it last year. We were partying and Bitcoin was going up like $1,000 every day of the conference. We kept redrawing a new number on Rodolfo's chest. 14,000, 15,000, 16,000.
Still holding.
Yeah. Yeah, and a lot of us are still holding. So I'm just going to talk a little bit about the price of Bitcoin and the concept of speculation and where I think we're going, and then I will leave some time for Q&A. I believe I have 25 minutes in total. Rodolfo? I have 25 minutes total? 25 minutes? 25? 25 minutes, perfect. Oh, I do have slides.
Sorry, but you have a 40-minute talk later in the last.
Oh, okay. Oh, so you know what? Let's save the price talk for lunch, and I'm gonna talk about the ICOs. Excellent. All right, so we'll save the price talk for lunch. I'll save that one.
Whatever you want.
Okay. We're gonna talk. Let's talk about price during lunch. I wasn't sure if the presentation was gonna come up. So I do want to talk about the ICO. So I think the first time I ever did this presentation was here last year, and it was in December. It was at the top of the ICO bubble. And the name of the presentation was The Inevitable ICO Bubble. And standing here 1 year later, the name of this presentation is now Has the ICO Bubble Popped, which has been the name for the last 6 months, because it really has popped. Also, for the last, 12 months or so, I had to change my LinkedIn profile, which has been saying, I'm not interested in your ICO or token sale. Please send all requests to Vitalik Buterin instead, who is responsible for this nonsense. And I want to talk about this irrational exuberance of what happens during a bubble and how did the whole ICO mess get out of control. What you see behind me is the entire, is the history of the NASDAQ bubble during the dot-com days. And as you can see, we hit the bubble in the year 2000. The valuation of NASDAQ was 5,000 points. The NASDAQ did not recapture that financial value until 15 years later. In 2015, it finally hit a new all-time high. And remember, that is 15 years not factoring in for inflation. If you factor in inflation, the NASDAQ did not recapture the financial value until 2017. It took 17 years. But what happened with the technology? Well, the actual technology was the internet. And did people ever slow down using the internet between the year 2000 and the year 2017? Of course not. But the speculation of people expecting every company to be to reach all-time highs, that's what ended. And we saw that in December of this past year. So I'm going to zoom in and talk about a few cases of the dot-com bubble. So basically, it all started in around the mid-90s. One of the first stocks to IPO very successfully was Yahoo. Yahoo went up 50% on the first day of trading. The stock closed at $33. If you adjust for splits, it was about $1.38 in recent valuation of Yahoo. Around 1996, the US Fed chairman warned about irrational exuberance, and then another big IPO took place in 1997, which was Amazon. Amazon went up 31% on the first day of trading, which sounds pretty good, but we'll talk about that in a minute. And that was at about $23 a share, $23.50. And in today's price, it was about $1.50. Then things started to get really, really interesting after that. A company called theglobe.com in 1998. And this is where the similarities come in with current ICOs. Theglobe.com was going to offer everyone to kind of be their own internet, very similar to how ICOs today is offering everyone to have their own money. And theglobe.com did very, very well on its first day. On its first day, the stock went up 600% on the first day. It traded as high as $97 and closed the day at 63, and it was expected to only be worth $9 a share. Of course, over the next 2 years, the stock went all the way to under $1, and the company disappeared, and a lot of people got sued, as a lot of them were. That was the record for the biggest gain in one day. That record was broken in 1999 with a company called VA Linux. VA Linux was going to custom build your Linux machine for you. The first trade of that company's stock was at $300 a share. That was a 700% increase of what was expected that stock to be worth. And as you can see by that chart, it did nothing but go down ever since. And 2 years later, that stock also disappeared. Here's one more. I remember it because I was actually, I used this company. It was called Cyber Rebates. It's an example of some of the business models that were coming out in the late 90s. So Cyber Rebate, they would sell you mostly electronics, let's say a Discman. We are talking 1999 here. They'll sell you a Discman, but instead of it being worth $25, they would sell it to you for $250. And then you have to fill out a piece of paper, mail it to them, and they would send you a check for the full amount of $250 within the next 6 months. Their business model was that half the people will be too lazy and forget to send in those rebates, and that's how they are going to make all of their money. So they had a lot of money in funding. They had about they had millions in funding, and they ended up owing 10 people over $100,000 each in rebates, and people ended up only making 9 cents for every dollar that they were owed, and it ended very, very badly. There were huge valuations. AOL bought Time Warner Cable, the cable company, for $156 billion. That's more than the entire crypto cap combined now. And that was at the very top of the dot-com bubble. And it was all about who can get out at the top. And as we know, most people can't get out at the top. Everyone thinks it will never end. So let's talk about one person that got out at the top very well. That person's name was Mark Cuban. So Mark Cuban in 1994 invested $10,000 into a company because he wanted to listen to his college basketball games on the internet. So he was just trying to put radio on the internet. He invested $10,000 for 2% of the company. He was then able to convince the CEO and the founders of that company that he should be the CEO because he can be a better leader for that company, and he was very, very successful in doing that. So his initial $10,000 investment allowed him to be the CEO of that company, and then they changed the name to AudioNet and went public. They changed the name to AudioNet, then they changed the name to broadcast.com, and then they went public in 1998. When they went public, his $10,000 investment became $300 million as the company was valued at $1 billion. 9 months later, Yahoo bought their company for about $4 billion, making him a billionaire, and they paid in Yahoo stock. He then sold almost all of that stock at the very top and was able to cash out the full $1 billion. And 2 years later, Yahoo had fully delisted broadcast.com. So you can cash out $1 billion at the top from a company that did not even exist 2 years later. So those that were able to get out at the top did very well. There were lots of other very interesting similarities between what happened during the dot-com days and what's happening now. So here was something that was happening often. eDigital Corporation. Basically, it was a company called Norris Communications, and they changed their name to eDigital. This was in January of 1999. So what happened to the company's stock by changing the name? It went from 6 cents to $2.91 that day. And then over the next several months, the stock went as high as $24.50. So from 6 cents to $24.50, just because you've changed your name from Norris Corporation to eDigital. And we were seeing that last year as well in the crypto space. A penny stock, it was a company, I forgot the name of the company, SIO Group, announced they were going to do an ICO. And all of a sudden, their stock jumped from about 3 cents all the way to 45 cents. And the US regulator stepped up. Here's a more interesting example. And this is the Long Island Iced Tea Company changed its name to the Long Island Blockchain. So what happens when you change your name from Long Island Iced Tea to Long Island Blockchain? Well, your stock goes from about $2 all the way to $16 that morning, okay? So again, nothing new, and the quote is really good. It says, "It's so reminiscent of what happened in the late 90s," said Scott Nations, author of The History of the United States and 5 Crashes. A company that had nothing to do with the internet would do a name change and the stock would absolutely soar. Here's a better example. This is one of my favorites. Pets.com. How many of you ever heard of Pets.com? A lot of you heard of Pets.com. It's actually a big laughing stock of the .com days, and I think that is very unfortunate because at the time, nobody knew who was going to win the online retail market. Pets.com or Amazon, is there really a difference? One was selling books and the other was selling pet products. And this goes to show you that the average person isn't capable of picking winners and losers. Even VCs mostly get lucky. Anyone know who the biggest investor in Pets.com was before they went public? It was actually Amazon. Amazon was the biggest shareholder of Pets.com when Pets.com was going public. So even Amazon didn't know who was going to win, them or Pets.com, because Pets.com had a lot of VC money and they had a lot of hype. And Pets.com went public about 9 months after Amazon went public, and they opened at $11 a share. And this is one of the parts that bothers me when people stand on stage and talk about how the little investor never got a chance to invest in Facebook pre-IPO. And that is very misguided because Facebook was not expected to win the social media realm. MySpace was very dominant. Friendster beat them to market, and there were a dozen others. No one could have guessed that Facebook was going to win. If the average retail investor could have been investing in these things, they probably would have lost all of their money in MySpace. However, once Facebook proved itself and they actually went public, the stock opened at $40 a share, a little bit overpriced, but that's okay. It fell down to $20 over the next 3 to 4 months, but then from 20, it went all the way to 200. So anyone with access to regulated markets could have participated in a 1,000% gain in Facebook shares. All right, so let's talk about something else. I wonder if we can play a video. If we can't, it's not a big deal. If you guys hear me in the back and somebody can hit the play button on this, if there is audio, that'd be great. Let's give it a try. Oh, no audio. That's okay. No big deal. So that is a commercial for Flues. And Flues was an attempt. Oh yeah, those are my videos from my YouTube channel, by the way. I'm sure a lot of you are kind of familiar with it. But so Flues was an attempt to put money on the internet back in the 90s. And but it had a problem. It had a flaw. It had the same flaw that a lot of the altcoins have today and all of the ICOs have today. Flues was centralized. And that is the big difference between Bitcoin and the rest. So Flues was money on the internet, but it had a company, it had a CEO, and the government eventually just came and shut them down because their online currency was being used for money laundering. Now, I don't agree with money laundering laws. I actually think they are very bad. I wish they didn't exist. I think that a person should be able to use their money any way they like. But the only way to prevent that is to have a decentralized currency. Are you good? Let's try it. Nope.
You're old, honey. Give them Flues online gift currency. It's just like money. You send it by email, they spend it at some of the web's coolest stores, and you come out hip and smart. It's graduation day. Duh.
All right, cool. All right, awesome. Let's even go back to the presentation. I got it. I got control. And so she referred to it as online gift cards because they couldn't describe it any other way, right? It was actually, like, if you read the description, it actually was money for the internet. And that ended very, very badly. And here's another example, and this one was great. So as I was searching around for all kinds of crazy stories from the .com days, I ran into this story where some guy just had an idea and he created a really cool website, something to do in communications, and he basically paid for a huge billboard in San Francisco introducing his idea. And the billboard was noticed, and a company paid him $100 million to buy his idea and gave him a contract that he has to help integrate his idea into their company over the following 3 years. And but then after about a few months, after about 3 months, the company realized he was actually useless and they were really busy. So they said, hey, take the $100 million and you can leave. We will integrate your idea. So he left and then realized his idea wasn't really much other than a billboard. And then he shorted the company and made another $100 million. And at the time I was looking for that story, here's what it reminded me. It reminded me of the EOS billboards in Times Square during Consensus, if anyone recognizes that logo. And I think the price of EOS this morning was about $2 and something. And I do think EOS is potentially a better future for ICOs than Ethereum because EOS is way more centralized than Ethereum. EOS, there's 21 people that control every transaction on EOS. So if you're gonna have an ICO, you're better off probably having it on EOS because all you have to do is join the board, the weekly conference call between the 21 people that control your transactions, and you can probably get stuff done. So just think about that. So how did a lot of these things end, right? So how many of you have seen the movie Wolf of Wall Street? Excellent. Anyone actually paid very close attention as to what he went to prison for? It was right there in the movie. Let's see if we can play one more video.
An IPO is an initial public offering. It's the first time a stock is offered for sale to the general population. Now, as the firm taking the company public, we set the initial sales price, then sold those shares right back to our friends. Look, I know you're not following what I'm saying anyway, right? That's okay, that doesn't matter. The real question is this: was all this legal? Absolutely fucking not. but we were making more money than we knew what to do with.
Okay, so anyone ever heard of the pre-ICO or the pre-ICO, right? That's what that is. And that was considered very, very illegal because when you hand out preferential treatment of shares that will eventually be offered to the general public, you are basically giving shares out to your friends and influential people that will then get to exit the moment it's offered to the general public. And as I was watching the whole concept of the pre-ICO, I'm like, oh my God, that's literally what Jordan Belfort was doing, and why it costs a lot of money to go IPO today, and why only big companies do it, because they take the responsibility of not handing out preferential treatment of these shares in order for your friends to make a lot of money. And some very notable people got in trouble for this. This guy, for example, took Amazon and Netscape public, and he got in trouble for the same thing. So I just want to close out this presentation on one more story. I remember the late 90s, I was still in my university, and I remember one of the guys in my dorm, that was in college with me, he borrowed $1,000 from his brother, and he was like trading penny stocks. And I never really understood how things got so out of control during the late 90s. And you know how they always say, when your taxi driver or your barber start telling you about the latest stock, it's really the height of a bubble. But how does that happen? And to me, a lot of it in the .com days had to do with the brokers, the online brokers. Because of E-Trade and Scottrade, you were now able to trade from the comfort of your own home. You no longer needed a connection to someone on Wall Street to be in the market. But there were still some restrictions. You still needed to be 18 years old. You still needed to have a bank account to connect to your brokerage. And if you wanted to be a day trader, you needed a $25,000 in your account. It's one of the restrictions. But in the crypto world, there are no restrictions, and it's really amazing. Anyone can now be a trader. There is no geographical restriction. There is no financial restriction. If you only have $100 to your name, you can go and be a trader. But the funniest one is there is no age restriction. So here's a glimpse at my email box. Dear Mr. Vays, I am 15 and a half years old and in high school. I am interested in Bitcoin and I read your Twitter posts. I have $1,500 in savings and is asking me for trading advice. One more. And here's a better one. If you look at it in the corner there, it was a conversation on Slack, and I wasn't even sure. And it says right there, but I'm 13, so I would like that coin. I'm like, I'm not sure what you mean. And the answer is, well, I'm 13 years old. So these were the traders that were trading a lot of these ICOs. And I really like these tweets by Alex Marcos. There's one big difference between traditional startup funding and ICOs. Founders of failed startups shouldn't come away financially enriched. And he says risk capital to explore ideas is great, but incentives aren't aligned where founders make money at expense of investors. And I also pointed out that a lot of these ICOs is just a way to separate people from their Bitcoin to basically fund their ideas. Bitcoin is fundamentally different. Bitcoin is actually decentralized, and it really makes a huge difference. It is here to help us separate money from the state, and all of its copycats and all of the ICOs are mostly there for other people to print their own money and get rich. So that's one of the highlights I want to point out. I don't have time to play this, but I do. It's a little bit long. But maybe we can fast forward real quick. I have like about a minute. If we can, that's okay, that's fine. I do encourage you guys to check out this documentary called Dishonesty, the Truth About Lies. And there is one part there that says, the further you separate people from money, the more people tend to lie and be okay with it. And so it's much harder to lie to a person's face and take money from them. But if you put a lot of distance in between, like, hey, you're just, it's just a token. It's not real money. And it makes it so much easier. All right, thank you very much, guys. Hope you enjoyed the presentation. And I will be here during lunch where we're going to talk about the price of Bitcoin, how we got here, and where it's going. And you can ask your questions as well. Thank you.